It's been a big week for NIO, and what a ride it's been. After a string of strong sessions earlier this week, NIO stock ended Friday modestly higher, closing out the week with a renewed sense of momentum and strength. Now, if you've been following our updates throughout the week, you already know that the stock exploded on Tuesday, rallying over 10% on the back of excitement around the Onvo L90 test drives, short interest chatter, and renewed optimism around the company's fundamentals. Wednesday and Thursday saw some expected consolidation, with the stock drifting slightly lower on what we've consistently said was healthy profit-taking, especially after such a sharp upside move. And now Friday's action confirms it. NIO bounced back, climbing just under 2% on strong volume, showing us that buyers are still very much in control. So let's unpack what this all means, what's driving the bullish momentum behind NIO, and what could be just around the corner as we head into a new week. First, let's talk about Friday's price action. The stock opened at $4.85, traded as high as $5.08 during the day, and closed at $4.92. The 1.86% gain might not seem explosive at first glance, but coming after a two-day cooldown, it's exactly the kind of technical bounce you want to see. More importantly, volume was once again robust, over 60 million shares traded, which tells us the market is still watching NIO very closely. But this isn't just about a bounce. This week has solidified a growing sentiment that NIO is turning a corner, not just in terms of stock price, but also in business execution and investor confidence. And at the heart of that sentiment is the Onvo L90, NIO's three-row family SUV and the first vehicle under its new Onvo sub-brand. Test drives for the L90 officially began in China this week. That's important because this car isn't aimed at the premium market that NIO has traditionally courted. It's designed for families. It's priced for volume. And it could be the first real step for NIO to bridge the gap between brand cachet and mass market scale. If early feedback is good and reservation numbers are strong, this could be the kind of launch that redefines NIO's sales curve moving forward. But let's not forget another ace up NIO's sleeve, its battery swap infrastructure. This is something we've talked about before, but it bears repeating. While most EV makers are focusing on supercharging networks and longer battery range, NIO is doubling down on convenience. Battery swapping lets you refuel your car in about 3 minutes, faster than most gas stations. And the network is growing. As of now, NIO has over 3,100 battery swap stations operational, and the company reports that nearly 20% of them are already profitable. That's a key stat, because it proves this isn't just a futuristic concept, it's a business model that's starting to make financial sense. And that leads us to profitability, perhaps the single biggest question investors still have about NIO. Can it make money? Well, the latest numbers suggest it's getting close. Last quarter, NIO posted a 10.2% gross margin and 22% year-over-year revenue growth. That's not profitability just yet, but it shows significant progress. With the L90 potentially driving scale and battery swapping reducing operational friction, the path to break-even is clearer than it's ever been. Now let's talk short interest, because it's still a big part of the NIO story. Roughly 9 to 10% of the float remains shorted. Borrow fees are still elevated. And as we saw on Tuesday, when NIO pops, it really pops. We're not saying a full-blown short squeeze is guaranteed, but the setup is there. If another positive catalyst hits, whether it's earnings, better than expected delivery numbers, or L90 presale results, those short positions could come under real pressure. And while we're on the topic of what's next, here's what we're watching in the week ahead. Number 1. Keep an eye out for more test drive feedback on the Onvo L90. We'll be looking for video reviews, customer reactions, and potential news around reservation figures. Number 2. We're getting closer to NIO's Q2 earnings release, which will likely hit in early August. That report could be a massive catalyst, especially if margins improve further or if management gives upbeat guidance for the rest of the year. Number 3. Battery swap expansion updates. There's been chatter that NIO could be working on a new generation of swap stations. Any confirmation there could reignite infrastructure hype. And finally, analyst reaction. We've already seen some quiet upgrades and price target bumps behind the scenes. If institutional coverage starts to ramp back up, we could see NIO gain even more attention from bigger money investors. So to recap, this week has been a strong one for NIO, not just in price movement, but in the quality of that movement. We're seeing steady volume, solid fundamental updates, and growing interest from both retail and institutional corners. And most importantly, we're seeing the beginning of what could be a bigger narrative, that NIO isn't just surviving in the crowded EV space, it's innovating, adapting, and potentially thriving. Heading into next week, the stock may continue to face volatility, but the underlying bull case remains intact. We'll be watching closely, and as always, we'll bring you the latest as it unfolds. If you found this update helpful, don't forget to like the video, drop a comment with your thoughts on NIO's next big move, and subscribe for more stock updates and EV analysis. Thanks for watching, and we'll see you next time.